Hello everyone and welcome into the channel. My name is Brent, and in today's video we are going to be doing our M1 Finance stock market portfolio recap of the week. I think that was a little bit long, but anyways, we're going to go and take a look at between 30th of May and the 3rd of February 2022. We're already 6 months into the year. That is so exciting. I hope everyone has been able to continue working towards or meet your guys' goals for the year as far as investing. I've already completely maxed out my own Roth IRA. We're working to max out my wife's Roth IRA for the year. We're continuing to dollar cost average inside of other accounts and continuing to do other little, goals that we have set aside for ourselves financially for the year 2022, and it's all going together fairly well. Despite the market being down 10+% year to date, it is still a awesome time to continue to dollar cost average, invest for the long term, and just, stay within your financial goals, right? So hope everyone is doing that. Today we're going to go ahead and cover 4 areas. Number 1, we're going to be taking a look at the M1 Finance overall performance. Where are we at year to date, or as much as we can say? And then number 2, the weekly performance. Last week we did have a bit of a red week, so we're going to go ahead and see how our portfolio did in comparison to the main indexes. We're going to take a look at the entire S&P 500 performance just to see what stocks were up, what stocks were down, what sectors were strong, what sectors were weak. Then we're going to take a look at number 3, so we'll go ahead and cover all of that. And we're going to go ahead and do it number 4, a quick breakdown of our current dividend income on a weekly basis. I'd like to continuously dollar cost average, which increases my annual income for my dividends on a weekly basis, which is really, really cool to kind of track and monitor. So we're going to go ahead and get into all of that. Friday was a bit of a negative day. You can see here the S&P was down 1.63, Dow Jones 1.05, NASDAQ 2.47, but we can see here stock futures for Monday opening up here in about 5 hours are all looking pretty positive. This can mean we could have a little bit of a bounce in the early morning of Monday, or this could be like a fake out where it just drops. Fed's supposed to be pretty hawkish going into June, continuing to raise rates by 0.5%. So that could continue to tumble the market down further, which is completely fine with me. Now, jumping over into the M1 Finance account and getting started with number 1, what is the overall performance of our portfolio? So we have came down a little bit off those all-time highs. We still got a return there of 54.31%. We still have market gains of nearly $6,000. So I've seen a lot of portfolios out there. This portfolio is 4 years old and then some, so it's pretty crazy. I'm happy that we are retaining some gains despite the recent pullback. That's always normal. But these earned dividends, we recently broke through $3,300 of earned dividends. So throughout the last 4 years, it started very slowly, less than $250 in annual income the first year. The second year, I think we broke $500 to $700. The third year, I think we broke about $800 of annual income. And here we are in 2022. We're making over $1,000 a year in annual dividends, all being reinvested back in, buying back more shares, which again increases our annual income going forward. And it just continues to compound year over year going forward. So it's pretty exciting to see those earned dividends. Soon in the future, going to be breaking $4,000, $5,000, and so on from there in this account. So it's pretty cool. Our top 3 winners, we can see Apple up at number 1. ABM Industries, this is one that wasn't in second place, I believe, last week. I think we had Pfizer and Abby kind of battling out second place. But here we go. We got ABM Industries popping into the second slot here, which is pretty cool. Then, of course, Abby and Pfizer, these have been battling out pretty hard here in the short term. Pretty interested in taking a look at these. I know I sold out of Abby a little bit ago. I'm not going to be buying into Abby just yet, but there's a couple other ones out there on my buy list that I am looking to buy into. And then our worst performers down here towards the bottom, we have Clorox. This is incorrect. It's actually down around 24%, which is still pretty bad, right? Clorox, but I bought it when I believed it would continue to go higher, but it did have a falling out in the earnings per share, and the share price kind of followed along with it. It still generates roughly $40 in annual dividends, so it's a good long-term buy and hold. And eventually this will just kind of recover with time. And eventually, I'm just kind of buying, using those dividends to just buy back into other shares of other companies. until it does make some sort of recovery in the future. IIPR, this one had been about 30-40% in the green not too long ago, but with real estate rates going higher and the slowdown of investments, people canceling out contracts, IIPR did take a bit of a hit. This is also in the MJ industry. So it's one of those ones. It's kind of finicky. Stanley Black & Decker. This is one I've been considering selling out for quite a while, just because, when times are tough and inflation is going rampant and prices are skyrocketing, people aren't looking to jump into new projects, hobbies, buying random tool sets where they could just kind of, save and collect money for other necessities. So Stanley Black & Decker feels like one of those companies that don't really pop into your mind on a daily basis. For us Starbucks here, people always gotta have their coffee. They're kind of, I enjoy my coffee, but I make all my coffee either at home or at work. It's all completely free at work, and then at home it's pretty inexpensive. I buy a $4 bag of coffee and it lasts me for 2 or 3 weeks at a time. But Starbucks in other cases, most people don't go very long with the coffee of their choice, which is generally Starbucks or many of the other coffee industries out there. But it has definitely been bouncing back very nicely, where it was at one point down pretty sharply here. We can see here throughout the time here, you can actually see the losses here, but it had been down negative. We've just been piling money into this thing with the market haven't been taking a toll on it, but it's been bouncing back nicely. Digital Realty Trust, is pretty interesting to see this at a 0%. I think this is incorrect, but it's pretty interesting just to see 0%, zero gain and loss there. Waste management is a new position we've added into our portfolio recently. If I'm going to be adding any money at the moment, I'm going to be tossing it at waste management. And we've kind of covered it in the past, I believe. I think I made videos on stocks that I'm buying right now or stocks that I'm not buying and selling. That was out just a couple weeks ago, I believe. So those are our top three, top winners, top losers. Now jumping over into number 2, weekly performance here. Let's take a look at the last 5 days. So let's go ahead and swap all these to 5 days. Now our portfolio is down 1.71%. And a lot of this has to do with some of the companies that were supposed to be some of the safer ones, I suppose. Hormel Foods had been, doing really nicely in the past few weeks, months. I recently took a little bit of a turnaround, so down 7.22% in the week. That's still fine. It's positive year to date, or just positive in general in the portfolio. And it had been, it skyrocketed there for a short term, just because people were piling into consumer defensive companies, and that kind of fits into that category. Clorox here down 6.61. Wow, that took a bit of a hit this past week. Digital Realty Trust, that one took a nearly 5% hit. Stanley Black & Decker, again, that one I told myself I want to sell, just never sold out of it. It's still in there, down 4.3. Merck, Apple, Johnson & Johnson, and so on. Our best performers last week, not very many, but we have Starbucks. Hey, there's that Starbucks here that we've been recently adding into, and ABM Industries. Only up 1.74% on the week, but it moved into the second place. So again, we had ABM and Pfizer kind of moving down to the downside, and then we had ABM kind of moving up to the upside. So they kind of moved around there, sloshed around between second and third place on overall performance there in the portfolio. So that is the weekly performance there as far as our companies, our portfolio. Now if we look at the S&P 500, let's do a look at the 5 days here. It is down 1.2%, so we actually fell a little bit further than the S&P 500. There was a lot of sloshiness going on through here. I really forgot what took place here on Wednesday, but there was a big run down throughout the day. Looks like it hit a double bottom midday and just recovered, lost it all Thursday open. During the night, if anybody bought during this time frame here, like, oh, the market's recovering, I better buy back in. Market closed after hours, shrunk back down. Thursday, a bit of a fake out here where it drops very sharply. Maybe a lot of investors kind of begin to sell out of here, saying, oh no, the market's going to be dropping even further. And then it took off here to recently, all weekly highs here, or weekly highs of the week, and then just kind of trails down, ending in the negative for the week. So it's pretty interesting just how much volatility is out there in a given day. Like this right here, on Thursday is a 2% gain, but at lows, it looks like it was a 2% low, right? So it may have sloshed around nearly 4% intraday, which is just pretty wild to see. The Dow Jones here down 0.94 and the NASDAQ down 0.98. So yeah, our portfolio definitely got beat up a bit more, and that's mainly due to just how much negative we had right up in this area here. We had a lot of red. Hormel, Clorox, Digital Realty, Stanley Black & Decker, Merck even, those are all 3% losses plus within the portfolio. So those help take a bit of a hit in the portfolio overall. And then if we look at the overall weekly performance of the companies, we can take a look here that, healthcare overall did the worst. Despite, wherever you were in healthcare outside of Abbott, you had a little bit of red in your healthcare area. Johnson & Johnson, Pfizer, AbbVie, Merck, all those positions which are generally doing really well year to date. If we look at year to date, let's just look at year to date really quickly. Just look at financial or healthcare, sorry. Healthcare is actually doing pretty decent year to date. You can see there's actually pretty green. Of course, energy is the best sector year to date. Exxon 61.94%, Chevron 51.34%. These have been skyrocketing. Check out the performance on the energy, oil, and gas right there. Just everything is up 59 or actually 46% started the lowest there on FANG, 46.05, and just goes up all the way to Oxy, 142% year to date on Oxy there. So that's pretty crazy just to see the sectors here. But you can see a lot of the sectors year to date are still pretty negative. Technology, consumer communication services, consumer cynical, consumer defensive had been doing decent, but recently with the earnings, Walmart, Costco, Target took a huge loss here recently with their earnings announcements, and just kind of inflation's actually beating them up a little bit more than they're able to raise their prices when they're losing money due to inflation. So they took a bit of a toll and got hit pretty hard here recently. Even Lowe's and Home Depot both got hit pretty walloped here in the short term. But overall, if we look at the yearly, year to date, there's a lot of opportunity out there. Definitely out there, a lot of opportunity. Tesla down 33% year to date. Amazon nearly 30. Google, Amazon, by the way, is going to be doing a stock split. I think this is the big headline here on Monday. So as you guys are watching this video or have watched this video, go check out Amazon's price here on Monday. This will be doing a 20 for 1. So wherever Amazon is currently trading at, say $2,000. They'll be down to, split up 200 by 20, and you just remove 1 0, and you get $200 per share. And you have if you have one share at 2,000, you now own 20 shares at $200. So it's pretty interesting. Let me know down in the comment section below if you guys own Amazon or are considering buying Amazon after the split. So that is the weekly performance. Now jumping into our activity number 3. On Monday, we had the 30th here. So we had one dividend from Siggy Selective, $6.20. We also made our deposit on Friday. So it doesn't actually look like we made any buys on this week. So despite the market dipping pretty hard this past week, we didn't actually invest anything on Monday. So that was probably my fault, just not buying anything. But we have this buy power here of $275. And you already know what I'm kind of focusing on right now. My main focuses are positions that are not quite, so positive right now. And also positions that are a little bit trading below $2,000. Are not trading below, but my value, my cost basis is below $2,000. So I'm trying to get all my long-term positions up to about $2,000. JP Morgan not too long ago had actually been negative. Now it's up 34.59%. So I'm definitely looking for opportunity up in this area. I could add more money into Starbucks. I could add more money into waste management. That was kind of my main focus here in the recent time. Digital Realty Trust, kind of interesting to see market gain negative 72.88 and earned dividends 72.88. So that's just, it doesn't happen very crazy. You can see here, I started buying this in 2018. So with me having owned this company for the past 4 years, and here we are at 0% gain total over the last 4 years. So it's crazy how this one has done. We didn't have a lot of equity invested in it way back when. We recently just started adding more money into it. Yeah, you can see a big transition in our equities in early January, and this company's been dipping pretty hard and then recovered, and then dipped pretty hard and then recovered. So it's just in the fluctuation area. And then number 4, oh, we didn't do anything, right? We didn't buy anything. So our current portfolio sits at $41,675 as total equity. Our annual income recently broke, not too long ago. I think 2 weeks ago, our annual income was at $1,180. So over the last 2 weeks, we've increased our annual income by about $20, and we've recently broke $1,204 for our annual income. So watch out. We're on our way heading towards our annual income of $1,500, and then soon $2,000 after that. You can kind of see, if we take a look at this website, this is called trackyourdividends.com. It is a completely free website anybody can use. You just go in here, you can add your holdings, enter the ticker symbol, how many shares you hold, the cost basis of the position, and it all adds it in here. You can kind of see it gives you the average share price, the profit, gain or loss, the current dividend yield based off the current company. You can see your yield on cost based off your unit costs, and then the shares, your annual income. So here, my biggest position that pays me dividends is Main Street Capital. I get roughly $10, about $10.25 per month times 12 months is $102.51. I think the math checks out. No, I don't think the math checks out on that. I think it's actually a little bit less, but because there's 12 months and not 10 months. But still, Main Street Capital, over $100 from that one alone. That's a BDC. WP Carry, $86 from, that's a REIT. Realty Income is another REIT. IIPR is a REIT. Digital Realty Trust is a REIT. So a good chunk of my dividends come from real estate investments. So that's pretty nice. We even have 3 of them that have market gains. Lockheed Martin here is about half of what Main Street has as far as annual income. They're within the $50 range for the annual incomes, and it just kind of trails down from there. Our least dividend paying company is Apple. This one pays $15.62. That's because the yield on this one is so low. We own about, what is it? Does it show me the total amount that I own? I think that's it, $998. That's our profit. It does actually show me the amount total that we hold of that company in here. But overall, it's not bad. I hold it mostly for capital gains. And then here we can see the expected dividend income. So for June, we can expect roughly $97 in annual income going forward. And if I want to see upcoming dividends, we can go ahead and click on here. And here in June, we have Avery. Avery Dennison paying out $744, Digital Realty Trust $1557, J&J, Lockheed Martin. So all of these kind of tally together to make $96.60. And then if you actually want to see when they pay, you can see here. Okay, so last week on Wednesday, we had $6.20 rolling in. That was probably from Siggy. That one probably hasn't hit the account yet, but it should be arriving here shortly. On Tuesday, we'll be receiving roughly $11.46. So if I roll up here, $11.46, that's Johnson & Johnson right there. On Friday, I'm going to receive, X amount. So it's pretty nice to kind of check out the calendar. And then I can kind of go forward and backwards here and kind of see, what companies are going to be paying and, whether they've confirmed it or unconfirmed it. A lot of times you can see here, when's the payment going to be coming in. So it's pretty nice information here, all completely for free. So that is going to be it for this video. Let me know down in the comment section below if you guys are buying anything here in the short term. I really appreciate hearing back from you guys. And that is going to be it from me. Appreciate everyone tuning in today. Again, if you guys have any comments or questions for me, let me know down in the comment section below. Otherwise, I appreciate all of you guys checking out the video. And that is it. Subscribe, follow along, and give this video a thumbs up. Highly appreciate it. Have a good one, guys. Bye-bye.